Everyone, and apologies. We had some technical difficulties on the original webinar earlier today, so we're just going to re-record the slides again. So we had a practice run apparently. Yeah, so just a little bit of a corporate update, and then Tony's going to give us a little bit of the update on the drilling and the underground development, and Oliver's here with us today to talk a little bit about the tungsten market as well. I guess a lot of you guys are probably shareholders or follow the company in some way, shape, or form. But again, we've traveling around 5 cents a share. Top 20 shareholders are still holding over 60% of the shares in the company, and 9% by board and management. Just a couple of developments on the company. I guess we announced it earlier on, but certainly Steve Weir has been a great value add on to the company. Steve's a mining engineer with a big finance background. And also Ian Kirkham has come on as acting CFO and senior financial advisor for us during a lot of this work that we've been doing on the transactions. So very happy to have that support. I guess what we really want to talk about today was this loan from the Queensland government, QIC, providing under the battery technology, critical metals and battery technology fund. We had a $20 million loan. Comes in two tranches. 12 million at the beginning as the first tranche, which is made up for doubling the plant capacity, and 2 million for drilling. And then tranche B is for further drilling and underground exploration, decline, opening up the decline, doing some trial mining, and then bankable feasibility studies. So we had some great support from the Deputy Premier Treasurer, Cameron Dick, and certainly Alison Hill has also been a big supporter of the company. Over the last 12 months, with the opening of the open pit at Carbine and then the acquisition of Solero, we've increased our tungsten production 6.5 times over the last year. And you can see on the right-hand side a lot of the new gear that's arrived on site, along with all the steel works, has coming. And this funding is for helping us set this equipment up and again doubling the production. The vertical integration is something that's sort of near and dear to our hearts there. There's a couple of aspects to it. We want to get to a tungsten profile that we can support a significant amount of tungsten. And part of that strategy is looking at Wolfram Camp, bringing that over the next 3 years, bringing that online, whether that's Bamford Hill or Wolfram Camp itself. There'll be some exploration going on. Some of the waste dumps there will be sorting. And also the tungsten in Spain, we see several opportunities around that operation to help expand. And again, I like this hub and spoke opportunity. It saves a lot of money on production. So what I'm going to do is I'm going to turn it over to Tony Bainbridge now, just to talk a little bit about the last news release that we put out, and a bit of the geology and the underground workings at Carbine. So yeah, Tony, please go ahead.
Yeah, thanks, Kevin. Pleased to talk again about some of the geology at Mount Carbine. I think everybody's heard us talk about sheeted veins and level controls to our system, and I guess these two photos represent that and show that well. On the left side, both of these photos are what we call the Johnson vein package. It's about 30 meters wide, but it's got a core of 11 meters in the center of it. We on the left photo, you'll see there, if you look closely, you'll even see the veins starting to thicken out, and those with very sharp eyes will actually see the black minerals in the white veins, and they're all large wolfram crystals. So we're just getting down. That was the first face and level we blasted, 20-meter face there, and we're getting down to the level where the high grade's starting to kick in. If you look at the photo on the right, which is the western end of the Johnson, we see the same thing, and as we're going deeper, the veins are getting more robust and stronger, and we're coming into the main vein system we predicted. Thanks, Kev. This photo, I guess, is some images to give you a handle on the status of the project. We're 10 months into mining at the moment, of 9 years of surface mining. The first 10 months have been in the orange area there, which is what we locally call Pit 1. It was a small grab and dig of what was left in the bottom of the pit by previous explorers in the old pit. We didn't have much drilling in that. In fact, you can see the drillings are shown here. The 3 red holes were old holes. That's all we had in that first area. The blue lines there represent our drilling, the EQR drilling that we did, and you see none of them managed to get into that area due to the water and the angle of where we were drilling. So we didn't have a lot of knowledge in stage 1 pit. It only represents 11% of the ore for this open cut mining, so it's a small thing, and we're learning on it. And what we didn't know was exactly where the level of the high grade would kick in, and we found that during this process. So it's been a very good educational operation. We will do about 2,000 tonne of tungsten out of that stage 1 pit. If you look at the right hand side, you'll see these are results. We had a bit of issue with one of the old holes, CV001, which was the first hole ever drilled on the project. We found that the whole survey was incorrect late in the piece, so we had to delete that hole. And of course, that was the one that had the grade in stage 1 pit. Otherwise, the stage 1 pit was represented quite well. You'll see the yellow areas. This is where the glory and this level control is kicking in. And that'll be in the stage 2 pit, which is the grey pit on the left. I think the large blobs there represented the grade and size. These recent photos also, I like the photos because they're the real thing. And you'll see that the left-hand photo was taken after a week of heavy rain, so there's a bit of water in the pit. But when it's wet like that, you can see the veins. And I think if you zoom in and have a close look at that, you'll see the quantity of veins that are starting to come into the system. So we're starting to get into the good level. Unfortunately, it's sort of close to the bottom of stage 1 pit, and we need to get back onto stripping and getting a much bigger pit going. So we did some drilling in April, and we announced on the 30th of April those results. There were 2 areas and 2 objectives, 9 holes to do some testing in between some high grade sections we had at the Elanth, and then we did 4 holes to again check this level control to the system. The 4 holes in Johnson there, which is shown in a vertical photo on the right, we did on the 4 holes were on the top level there at 3, 4, 5 meters, and we wanted to compare that with the previous drilling we'd done at 3, 2, 5. And you can see the results there again as the veins thin and they become less mineralized as you go up. From 3, 4, 5, we got 11 meters at 0.21, and we got 3 times that grade 20 meters down. So we're starting to come into it. Most of our pit 2 is designed to start from 325 and go down to 225, 100 meters below that. Thank you. This is the detail of where we drilled on the Elanth there. We drilled in between 2 high-grade sections, which are shown on the plan at the right there. They're 50 meters apart. And the 10 holes that we drilled, 9 holes we drilled there are the X's. So we wanted to check on 10-meter spacings what that high grade looked like. If you look at the 2 sections either end on the left, you'll see those high-grade things that form part of our resource block model. They're shown in red, and you can use the letters to indicate the intervals and their grade. So, one of the zones we wanted to check was A there. It was a 8-meter zone at 0.66%, shown in our first EQ hole. And when we drilled 40 meters above it, we got the 8 meters of 0.86, so a little better. So that was a good check of that particular vein. And G which is halfway between those 2 zones, was a check of these 3 veins that make up the Elanth zone. And if you look at B there, B was 24 meters of 0.28. Down deeper, sorry, it's on the other section there, Kev. B, C, and E are what we were trying to replicate in halfway between. And so B was 24 meters, 0.28. C was quite a good result further east. There's 37 meters of 1% tungsten, and E 38 meters of 0.48 going the other way. So we were in that sort of high grade area, and we wanted to check it, albeit that we were 40 meters higher. So our yellow result was very similar. We got 32 meters of 0.41. So it gave us the comfort that the grade between these 50-meter sections was continuing. And I will make the comment that all the grade sits within those grey lines on the plan there, which represent the veins. Those veins run, generally 2 to 3 meters, and they're running 2 to 3%. And we then dilute them across that zone with the white internal waste. So, these veins are particularly high grade, and they're excellent for looking at doing some underground. So we always had that in mind, that these veins may lend themselves better to underground, but while we're still close to the surface, we're going to mine them from open cut. If we look at where QIC is going to help us out, we've got this isometric picture here. The red there is the indicated resources we've drilled out. That's about 6 million tonne in red there, and that's what we get out of the open cuts. But it represents only 17% of the total resource. The green, it doesn't look as much here, but the green currently is 22 million tonnes of 0.3%. That's sitting in inferred. And you can see a lot of it sits to that north, to the left of the screen, which is grid north of the pit. Our objective is, out of that 22 million tonnes of 0.3, is to look at what we could get from underground. We think that we can do that in parallel to the open cut mining. And to give you some example, we're planning with the QIC money to extend on the existing tunnel, which is shown in green there. Kev will probably point that out, but the green tunnel there, 430 meters, is already built for us, gets us down to the level where the tungsten's coming in, and we intend to add 700 meters of new tunnel, doing some trial mining. But that is all after we do a major campaign of drilling, as Kevin said. So we've currently got about 20,000 meters of diamond drilling at Mount Carbine. We're intending to double that. So we've got another 20,000 meters to drill all that green area out to indicated. Once we do that, we can then do proper studies on it, feasibilities and so forth, and then bring the value of that 80% of the resource back onto our books. So, the company currently is rated basically on 20% of the resource out there in the public arena. Our intention is to bring a lot more of that forward and also extend the mine life. Out of we already know that there's approximately 4 million tonne of 0.52% in that underground area. We're using a high cut there, and that would give us that, if that proves up into indicated, it would give us another 10 years of mine life, roughly at a production level of 3,000 tonne of concentrate a year, which is about the same as the open cut. Now, to do that, we would need to mine 1,000 tonne of underground ore a day, which is quite a small underground operation. So, this way we've got Kevin's doubling his plant size. We're doubling our access to the resources, the tonnes of concentrate we're going to get out. So we're on a fast track to doing underground, and the green area there certainly helps with existing declines. I think we've got a picture of that as well, haven't we, on the next slide? Yeah, so that's the adit that exists. It's currently covered, and we'll be opening that up in the next short period. And on the left there just sort of shows how we will mine these veins. It's a mining method called avoca, and we use a slight variation on avoca called modified avoca, and that's where we drop a whole panel of 30 by 20 meters in one blast, and then mark that out to get our 1,000 tonne a day from underground. So we're excited. I think, the underground's got the tonnes. We sort of know they're there from the inferred resource category, but we want to add that value into the company by getting it to indicated and a proper feasibility done on that development. And that's what QIC's has decided to help us on. So we're excited about that. Thanks, Kev.
Yeah, thanks, Kevin and Tony. Very encouraging, obviously, for everybody who's listening in there on the plant expansion, and also that we have ability to obviously move resources into reserve. So, given that there was a bit of a dynamic in the market, which translated into significantly higher prices now on a week-on-week comparison, we thought that we'll give you a bit of more insights where we see this is coming from and potentially where it's heading. But this slide here, I guess you're all well aware of the significance of tungsten. The bottom left showing the rating of the European Commission. Was just in Brussels 2 weeks ago and met with a committee there. And they have effectively launched the Critical Raw Materials Act and the related programs, which allows companies, and that would very well qualify for obviously our Saloro operations and the envisaged expansion program, that we starting from the end of this month until August call for proposals. And yeah, I believe, I'm confident that we can likewise put some very solid propositions together, as much as we have received now with this latest Queensland funding. And throughout the last years, we have been grateful that the Australian government had been so supportive, and we see similar dynamics now in Europe. So, and that is primarily due to the fact that you see in the bottom right pie charts, the fact that China sits on quite a lot of supply output into the markets. And you do recall earlier presentations where we highlighted the end use consumption, the end demand, effectively driven from various sectors that I indicate next slide. But that's mainly a third within China, another third North America, Japan, Korea, and a third within Europe. So there's obviously that misbalance, and that's definitely a reason why tungsten is classified as a critical mineral across the board. So maybe jumping on, that's also not new. We've always outlined the key sectors where tungsten is used. You see that in the left supply demand overview. Automotive, I would say that despite a great push towards electric mobility, we do see extension of production programs towards hybrid models. So that will definitely give the combustion engine a bit of a longevity compared to what maybe initial announcements were. Again, a lot of tungsten tools are being used across the automotive manufacturing chain. So probably we see still pretty strong demand from the automotive sector. Mining probably going through a revival, seeing where prices are heading at the moment. And then oil and gas. One of the indicators that we are tracking is the number of oil rigs, in operation. North America, we're now sitting at slightly above 800 rigs. So these are some of the parameters or indicators that everybody, all of you, can track, because this is the driving force in for example, oil and gas production exploration. It's numbers of rigs. We see in aerospace record orders for Boeing and Airbus. Automotive, I indicated. So these are the more traditional sectors where tungsten is used. And then we have the military. I don't think I need to go into detail there. Fortunately, the manufacturing of military equipment and ammunition, specifically where tungsten is used as penetrators, is rising double digit at the moment. And then the green energy space and the semiconductor industries. And this is what we would call the new industries, and we see double-digit growth coming from there. So that's probably giving a good indication what are the end sectors, the end use sectors that are up and rising, and it all results in a great consensus across. We have shown here just 3 pricing agencies, or even the Tungsten Association itself put out forecasts. So it's not our own; it's a consensus number and that leads towards more than 10,000 deficit in average by the end of the decade. And with the recent price dynamic, you would think that we are already in a deficit. The next slide is giving you a bit of a drill down perspective. The prices that are published on the left there, as you might follow that, some of it we will publish on our LinkedIn page. But very strong developments over the last 4 weeks. Specifically, we have reached prices which are above a level that we've seen last 1 year ago. And you see typically it moves with a relatively mild dynamic, but you see that the curves are shooting up like hockey sticks. Difficult to say where this is ending. A matter of the fact is that it's very difficult to book material at the moment. We have a good oversight on what is traded from China into Europe at what prices. So we are tracking custom information, and I would say that's definitely not the end of the game for this year. So there's quite some pressure. Where does that pressure come from? The top line there, the 4 boxes, explains the narrative. It's all about China from I think a global driving engine for the world economy, but also the supply side, right, and the constraints. And how does that translate into trade balances? Now the great narrative that everybody's using for policy making across the board is national security, and everything has to align to that mandate. And the question is, with the onshoring and the decoupling of supply chains globally, are there sufficient projects on the landscape within China, but also in the Western world in order to feed the requirements of these markets? The 3 bullet points, I've just picked the 3 highlights for me personally in the last couple of months. Number 1 is in the end of November, the Ministry of National Security of China defined a series of critical materials, tungsten one of them. And subsequently, beginning of 24, the government had reduced the production quota for the tungsten sector. And that is haven't been seen in decades, right? So it was always a little bit on an uptick to promote domestic mining of critical minerals. But the government clearly shuts down on that idea and is reducing the quota for 2024 and is expected as well in 2025. So they are certainly trying to manage the outflow of tungsten. Second one is the fact that there was a new round of environmental inspections just announced a couple of days ago within China. That typically leads to a seasonal stoppage of some mining activities in some areas, especially small-scale operations are shut for a couple of weeks. Let the inspections pass by, and you might see them coming back. And the third one, looking over the ocean towards the US, quite significant. The fact that the Defense Logistic Agency, which is in charge of stockpiling strategic materials for the US economy, has announced in May 2023 that they're not going to further publish, specifically on tungsten, not further publish the stockpile informations and what industry participants are actually extracting from the stockpile and what the balance is. So that clearly indicates that stocks are extremely low and leads to speculations where the DLA themselves, not really an end consumer, but just as a stocking agent, will come back into the market this year. And that means additional demand and additional pressure on prices. Not many people maybe look at trade statistics for China. Again, the largest player in the market. So we are tracking those informations. And as you're all aware of, more and more stringent transparency laws, specifically in Europe and US. I think the private sector starts to realize that some of the imports into Europe and US, and you see them on the right, the export from China means import into the Western world, 10,000 tons, quite significant. Europe, Japan, South Korea, US with more than 90%. That those importers are obviously trying to understand how the Chinese industry is, converting on what basis of raw materials. And if you simply look at the import balance on the left, 5,800 tons of tungsten equivalent in concentrate, the countries that you read in the bottom, representing 78% of the imports, are not necessarily countries that will take a pass on the transparency requirements that the laws provide, again, to private sector in the US and Europe. So that's something that drives diversification push, and EQ Resources, as the largest non-Chinese producer, is certainly on top rank. And me to the final question on where does the new supply come from? So we concluded that there's a squeeze coming, if not already in place, looking purely at the last week's price dynamic. And a matter of the fact, when you look at our own bankable feasibility study, and a market report backed up by a third-party agent, a pricing agency, market agency, which have indicated a number of projects outside of Asia that would come online in the time period 21 to 24. And we've just listed down the top 5 projects in terms of output. As you're all aware, there's another company in Tasmania, good friends of us, in a ramp up. We wished him luck, but it's slightly behind schedule. A large project in Canada, it's in the market since long, was supposed to be going in production 2023. They're just in a funding round to keep going on their studies. So it's nowhere near delivering tungsten units. South Korea, a project well known to the market, should have been in operation 21. They're still under development, I would call it. Might come a bit later than people anticipate at the moment. Another one in Spain, which was cancelled completely. Significant tonnage, 1,000 tons annual output, was scheduled for 2024. It's off the table completely. The license had been revoked, and we wouldn't definitely see that moving forward. And in the UK, also a project that is well known in the market, 3,500 tons, was supposed to be commissioned in 2020, started up, but they changed ownership a couple of times, and it's on a complete reset. So what does that tell us about the forward looking? Again, we're not here to be able to project prices, but we are going into a squeeze, and we are not seeing any project in a state where we could argue that it will bring additional units into the market in the next 12 months. So I hope that gave everybody a bit of an overview, and please reach out if any question in this regard. Kevin, I hand back to you.
Yeah, thanks, Ollie. That's great. So I guess why own the EQ shares, or why purchase EQ shares? I think we got some significant programs underway currently at Carbine. One being the scalping at the low-grade stockpile that'll bring in another 100 tons a month, doubling the plant capacity at Carbine. The gravity plant's already doubled. We're just looking at the crushing plant with the QIC funding in place now. Significant drilling. We're going to be drilling some very high-grade underground intercepts. I think that's going to be very good news for the market. BFS on the mining, reopening the underground decline, and then Wolfram Camp and Bamford Hill. We're quite excited to get stuck in and do some exploration over there. We think there's some really easy wins on that Bamford Hill in particular. It's well defined, and nobody's had a crack at it in a long time. At Solaro, we haven't talked a lot about Solaro on the webinar. We are going to give you guys a good update. We're in the middle of an upgrade of the plant, in particular, increasing the size to the sorters to 40 mil from 20, a new screen to help at the table section, some cyclones up front to help reduce the mass that goes to tailings, and define the course from the fines a bit more clearly. So I think those are all good. A bit more drilling along strike there this year, and some exploration, and a new reserve announcement coming. So these are all good announcements that should be coming out in the near term. And just again, I think as most of us are probably EQR shareholders, we continue to support the community. We have excellent communications and support within the community. Our environmental standards are world class. You know, we're operating in both Spain and at Carbine. We carry really good ESG credentials, and again, our quarry using beneficial reuse out of the sorters is a key aspect to the company. So I guess I'd just like to thank everybody for attending today. Sorry for the technical glitch that we had to redo the webinar, but hopefully we had a good chance to make it. And again, you can read these at your leisure. I think we've covered most of them off through the webinar. Thank you very much.